The International Monetary Fund marked our economic outlook down last week, but not everyone agrees with the predictions. Joining me live is Peter Switzer, founder of the Switzer Report, for our bit of business news this Monday morning. What can you tell us about this, Pete? Good morning to you.
Yeah, Pete, IMF marked the global economy down from about 6% to 5.9%, not much. But Australia, we went down to 4.1%. Now, that very day, I interviewed Westpac's chief economist, Bill Evans, who's probably regarded as one of the best forecasters, from the big four banks and compared to most economists around the country. And Bill shocked me when I interviewed him. He said Australia is expected to grow next year by 7%. That's an enormous number. So I think anyone out there who's believing the IMF tale that we're going to be suffering a slow year of growth, better have a good close look at what Bill's saying. 7% is one of the biggest numbers you could ever expect for the Aussie economy.
Just correct me if I'm wrong here, Pete, but was it Bill Evans also who last week predicted when it comes to the housing market that we're seeing these huge gains at the moment, of course, upwards of 27% in some cities, being Sydney, but next year it might drop back to about 6%. Is that correct?
I think you're right. Even if it wasn't Bill, I think you are right. Other economists are agreeing, and I interviewed the founder of Century 21, Charles Darby. Now, he's got over 300 offices around the country. And what he's seeing now is the supply of property is starting to increase because people just weren't prepared to list it during lockdowns. And so you got that. The demand was always high over the lockdown period. It probably is slightly higher, but the rate of increase, and you throw in the APRA decision to make it harder for people to get loans, it makes a lot of sense that prices still might rise in 2022, but nothing like the pace we've seen. Yep.
Good point. All right, Pete. Meanwhile, we just heard from Barnaby Joyce re net zero emissions and the conversations that are going on in the party room meeting. They will continue today. So no dice yet when it comes to an answer. So what does this mean for green-oriented stocks?
Yes, good question, Pete. I think over time, given the fact I think the Nationals will eventually capitulate, but they'll probably be receiving a lot more money than is currently being put out there. Because when you think about the amount of money that goes out of the farming and the coal industry, which has a big impact on regional Australia, I think coal exports can be up to around $100 billion a year. So I think that the Nationals are going to expect a lot more, but they're going to get it. And the bottom line, I think, is that over the next 10 years, green stocks are going to do very well. And we've already seen, electric vehicle stocks like Tesla, they've already gone through the roof. The fact that the big manufacturers around the world are getting into it now.
Lithium stocks are surging, Pete, on that.
Precisely. You look at and rare earths as well. All this stuff is the new age. And by the way, even S32, which is South 32, which was the spin-off from BHP, regarded as the minerals and the mining businesses they didn't want, its share price is doing really well because they're in all the different spaces like nickel and copper and whatever. So these sorts of, I think the ESG, this demand from the big fund manager, or like the industry super funds, that fund managers play ball only with clean industries and clean businesses, it's going to be big over the next 10 years.
Hey, just quickly, Pete, almost out of time, but we've spent so much time talking about Crown, given what's going on, but now Star's been caught up in a whole lot of drama. Is it in the buy zone now?
Interesting, Pete. Crown, at the worst of it, was around July, August. It has rebounded 13% since then. But I think, given the fact that Maurice Blackburn is now mounting a class action, we'll probably see the share price go down. But if you take the old advice from Warren Buffett, be greedy when others are fearful, it probably is. But of course, gambling stocks also have an ESG problem. But there probably is a bit of a bounce money to be made. But remember, Crown's still a long way off where it was before all this bad news happened.
Peter Switzer, good to see you. Talk to you soon.